Welcome to the Captain's Blog. I am David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there on Wall Street, make it understandable to you on Main Street. Finished up 0.5% last week, up 2% for the month. Again, we started the month down 2% in one day, and the rally broadened. It wasn't just the 6 or 7 names, 1 or 2 that you cannot pronounce. Again, it went into the international market, went into the value stocks as well, which is again why you need to continue to be diversified. And that's why you consult your local financial advisor for those details. Did the positivity continue going into a weekend where we feared that the Middle East crisis would expand, that oil would spike? Here's your weekend review. So the answer to that question is no. The market is down only modestly this week in the face of an expanding conflict in the Middle East, in the face of the longshoremen going on strike, with inflation now another concern. Again, stay proactive in your portfolios, folks. Oil should have spiked. It didn't. It went up slightly this week, with Saudi Arabia pledging they're going to keep pumping oil to keep oil prices down and the price of the pump down as well. Shocking that that's 4 weeks before an election. So again, stay proactive in your portfolios. And this is a lesson to you that the international markets are now outpacing our market. Be there before the market gets there. Stay diversified, but set your expectations. Volatility is going to increase as we get closer and closer to the election. We're now in pre-announcement period, where corporations, will confess their sins. This is why we didn't make our numbers. This is why we're not going to make our numbers going forward. But again, throughout all of this adversity, we're down marginally. And here's what to look for next week. So again, all eyes are going to be on the Middle East. Does that conflict expand? And does it affect the oil market? Which again, there's less money in your pocket. We're paying attention to the pre-announcements. I say this over and over again. It is important to pay attention to fundamentals. That's why you own the stock market. You own the stock market for growth. So if firms are out there pre-announcing that they're not going to grow as much and a market priced to perfection, be prepared for some profit taking. And lastly, a number of you out there are asking me, what happens with the election? Should we go to cash? Should we go to this sector of the market? Should we go to the defense sector of the market? I will say this to you, that Wall Street likes gridlock. Gridlock is predictable. So if the presidency goes one way, as long as the Congress is still divided, Wall Street will breathe a sigh of relief. So again, do not try to market time, especially in your taxable accounts. You're going to create taxable gains that, again, you're going to be giving the money to the Treasury and less money in your pocket. But it is important, as the volatility continues to increase, to set your expectations. Again, rebalance your portfolios and turn off the TV. So here's your personal finance tip of the week. I mentioned the term asset allocation. In basic terms, take your short-term money and have it at a local bank. 6 to 12-month money, cash, CDs, 12 to 18-month money. Maybe look at some short-term fixed income bond investments. Do not have that in a market where volatility is going to increase. The worst thing you could do is call us back on August 5th when the market had its worst day in 18 months and say that you needed cash. And a number of you out there are taking cash out of IRA accounts, out of 401k accounts. If you're under 59.5, 10% penalty, Fed tax, state tax, short-term money away from the market. So thanks again for checking in. We'll see you next week on the Captain's Blog.